Welcome back. This is Chili Davis, and I'm back to another video. I want to welcome back all my subscribers and all my new viewers. This is a channel where we talk about my top stocks. We also talk about business ventures that generate passive income and dividend stocks. So if you want to know about some high-flying stocks like Tesla, Apple, or Microsoft, or even Google or Amazon, please continue to follow this channel. Please like and share with friends and family. Well, it's official. Tesla stock has split from roughly a price of $900 a share, 3 ways down to $284 a share. So we saw the stock split the other day, and the stock became $301 on Thursday. And then on Friday, the stock went ahead and closed at a low of $284 per share. Now, this is typical after a stock split, after the initial share price coming out as a split price, it typically drops another 10%. So it's a great time to pick up Tesla stock at $284 per share. Okay, so Tesla is in much reach. As you can see on my Robinhood account, I pretty much have dollar cost average, a little over $286, excuse me, $246 at an average cost of $286. So this is something you could do. You could start buying Tesla on Monday. You could buy $10, you could buy $20 of it, but eventually you'll own one share at $280 to $290 per share. Okay, so Tesla is in reach right now, and you can buy $10 or $15 of it. All you have to do is come over here and say, hey, I want to buy $5, and it'll give you 0.0175 of Tesla stock. Okay. So also, I am a Tesla shareholder in my other account as well. So some of my top holdings now is SoFi Technologies, where I own a little over, see here, 168 shares. Also now, after Tesla split, I own a little over 49 shares, as you can see. So originally I bought 5 shares of Tesla. Then they split and it went up to 20 shares, and I sold a couple of shares, sold down to about 16 shares, and then the stock split again, and now I'm up to 49 shares with a gain of a little over $11,000. Now, another stock that I'm watching is ChargePoint. ChargePoint roughly trading about $15 per share, and I have a little over 58 shares. My next largest position is Ford, where Ford shares, I own a little over 150.75 shares. Now, basically, this 0.75 is the dividend reinvestment. So every quarter when Ford pays out a dividend, I actually buy back in to get more shares. And then lastly, my largest position is SoFi Technologies. Again, SoFi has been up and down this year. I bought big batches of shares even when it was $15. Now it's trading at roughly $6 per share, but I believe SoFi is coming back, so keep your eye on SoFi. But as far as EV companies, Ford Motor Company with the F-150 Lightning truck, ChargePoint with the charging station, and of course Tesla, I will continue to buy shares in. All right. Now, the latest news we had on CNBC is Federal Chairman Powell. He did decide to state that he's going to continue hawkish with rising interest rate. He's going to continue to raise interest rates until the economy comes back into correct form. There's basically too many jobs for people, and many people are getting pay raises. So he's going to cool off the economy. And basically, he said in September, more than likely, they will raise the interest rate to 0.75, while other investors will prefer a 0.5 rather than a 0.75. It sounds like after this meeting at Jackson Hole in Wyoming, he basically came out 7 o'clock Eastern and stated they will raise interest rates next month in September. So not good news. A lot of money sitting on the sidelines. There is a few people stepping in and dollar cost averaging, but for the most part, there's a large consensus of millionaires and billionaires who are not buying into a market that is in a downtrend. Okay, so the best thing you could do, of course, is dollar cost average. Whether it's Tesla or Microsoft or Nvidia, you can do that here on Robinhood and just dollar cost average over time. If we know Amazon, for example, Amazon right now is trading at $130. I would definitely just dollar cost average. Okay. You can't lose with a stock that is worth thousands of dollars and they decide to split their stock 5 ways. For example, Amazon was trading a little over $2,000, and it's a great time to step into Amazon while it's right after it's split now. It's been up for the last month or so. So if we look at Amazon over the past month, it's up over 10%. This is probably the best time to get into Amazon while it's down before it reaches levels of $200 per share. Okay, so check out Amazon. Again, it's trading at $130 per share. Another stock you want to take a look at is Google as well. Google right now is trading at $110 per share. If we look at the last week, it's probably been flat. So again, it's been actually down slightly over last week, 4.39%. But again, this is a stock that before it split was trading at roughly over $1,000 per share. So again, take advantage of this time where Google is trading under $110. And we'll just see into the future. This baby probably in the next 5 to 10 years will go well over $1,000 per share. Okay. And then the last stock I'd like you to take a look at is Microsoft. Microsoft is a great stock as well. Again, this stock is trading roughly at $267 per share. And again, it's a great value. This stock I bought in early. As you can see, I'm up a little over 39% on my position with Microsoft with an average cost of $190 per share. And the still stock is trading at $267 per share. Okay, so I'm up pretty much 39% in my Microsoft position, but I also own Microsoft in my TD Ameritrade account as well. And it's definitely one of my better stocks that I own as well. So if we look at my top gaining stocks, number 1 is Tesla and number 2 is Microsoft. Okay, Microsoft is a great value. I bought into Microsoft when it was roughly $180 per share, and now it's trading at $267 per share. Okay, so between Microsoft and Amazon, they own the data cloud. Google is in a late third. But if you're talking about technology stocks that will run this country in the next 10 years, you're talking about Microsoft, Tesla, we're talking about Apple. Let's take a look here. Apple here. Okay, so we like I said, Apple, I'm up to a little $420. Now, again, I have several portfolios where I own Apple and Nvidia and Microsoft. So just in this portfolio, I'm up a little over 20% on Apple. And again, another one I'm up this year is ConocoPhillips, a little over 100%. So if we look at my number 1 position is Microsoft, Tesla, up 477%. Also, second place is ConocoPhillips, up a little over 173%. And in third place, Regis Financial Bank, and in fourth place, Microsoft. So those are my top stock and position. Again, take advantage of Tesla now because it's trading at a little over $284 per share. And also take a look at ConocoPhillips, some of these oil stocks, which are dropping as well. But if you want to look into technology, Microsoft is a great buy under $300 per share. Okay. So again, this is just my short video today. The after effects of Jackson Hole, most of the market is down after Jerome Powell's comments. Jerome Powell basically said he's going to raise interest rates, which affect most of the economy. Okay, so and that affects technology stocks in particular. If you're in the NASDAQ in particular, you're going to face some red. But again, it's better to buy some of these best stocks while they're below their value. Okay, so I want to thank you for watching. Thank you for listening. Please like, share. If you'd like to get some free stock today, please use my Robinhood link below, and we'll have a great weekend.